It's Adrian Bowe, Chief Auctioneer for the Ray White Tesla Group and CEO of Adrian Bowe Training and Auctions. I'm providing a market wrap for Sunday the 2nd of February. We had an outstanding day with two auctions, both selling well above the reserve price, so that's 100% clearance rate, which is quite a contrast and a dichotomy to what else is happening in the marketplace, with clearance rates nationally this week being more around that 60 to 65% mark. There was over 1,400 auctions scheduled in Australia this week, and you'll start seeing those slowly build up over the coming weeks as more inventory comes onto the market, as people start to realise that interest rates potentially could come down, and also this is still a very good market to be selling in, despite what you might be hearing in the media. We're certainly on the back end of what that boom market was in that mid to early last year. It did slow down a little bit towards that latter part of 2024, just being after Melbourne Cup Day, where people were quite focused on Christmas parties, and I think there was quite a bit of buyer fatigue and buyer exhaustion, but we've certainly come back with quite a renewed interest and energy into the marketplace. With the two properties we had that I successfully sold under the hammer on behalf of 𝐻𝐿𝐦𝐻𝐬 from Ray White, the Tesla Group. One was 30 Swinson Road in Blacktown. We had 15 registrations, which is quite anomalous in that particular market, and that one sold for $1,663,000. I can't reveal the reserve, but it certainly was hundreds of thousands over the reserve price. So quite a delighted owner, and 𝐻𝐿𝐦𝐻𝐬 and his team did an outstanding job there. Then we went to 3 Daffodil Street in the precinct of Marong. That one was a more modern home, a smaller home, where Swinson was a home that had been in the family for 30 years, and a double brick home which you could add value to. But with Daffodil Street, quite a modern home, a great location, and that sold for $1,151,000. Again, we had double-digit registrations with 12 there, and also selling for well in excess of the reserve price, at least $100,000. So that was an outstanding result. Certainly the cash rate is still remaining at that 4.35%, which is bringing in interest rates from the majors and second tier lenders somewhere between 6 and 7%. There's a lot of posturing obviously happening at the moment from the RBA that they may reduce interest rates. It's very hard to indicate at this point. The only positive sign obviously was the fact that underlying, or better known as core inflation, did drop for the first time in some time. Now, the RBA do have a mandate to ensure that the cash rate remains within that target range, which was established in 1994, between 2 to 3%. Headline inflation has been coming down for a while, but that does include all goods and services, where underlying or core inflation removes the volatile commodities such as fuel and food, and that's what the RBA are very focused on, that underlying or core inflation. So that's now getting closer to their preferred target of 2 to 3%. It's come down now to 3.2%. That's why you might be hearing in the media that the February announcement could well be, in a downwards trajectory, but that's something that we need to wait and see. If they follow the mandate, it shouldn't go down, but with Michelle Bullock being a new governor and trying to provide some reprieve for mortgage holders, it would be nice to see maybe 0.25% there, and then obviously see the majors pass that on. Look, residential property is still the safest bet in Australia. It's worth a combined value of over $11 trillion, which outweighs the combined values of other major asset classes, being superannuation, the ASX, and commercial real estate. So look forward to reporting back to you next week, and see you then. And I really appreciate your time.